Welcome to CPA Australia's event, Business Technology Use in the Asia Pacific. My name is Jana Schmitz and I am the Technical Advisor for Assurance and Emerging Technologies at CPA Australia. We have people joining us from all over the world for today's webinar. I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. I would also like to acknowledge that today we are joined by the CPA Australia Deputy President and fellow Tasmanian Divisional Council Deputy President Rick DeSanti and Board Directors Louise Cox and Rosemary Sinclair. Thank you for joining us today. It is now my pleasure to invite my colleagues Gavin Ord, Business Investment Policy Manager at CPA Australia, and Jonathan Ng, Policy Advisor from our Hong Kong branch office. Today we will be taking questions through our Q&A box. Please direct all the questions to all panelists. We will address questions at the end of the webinar, and for any troubleshooting queries, please send your messages to the host using the chat box. It is now time to start the session, and so I will hand over to you, Gavin and Jonathan. Thank you.
Thanks, Jana, and hello everybody, and thank you for joining us today wherever you may be in the world. And I'm assuming many of you will not be in your usual place of work. Before I start, just want to go through potentially a few quotes that are relevant to today. So this one's from Stuart Brand, who's a technology writer. Once a new technology rolls over you, if you're not part of the steamroller, you're part of the road. I think that's some of that will come through today. But also, this is from Christian Lois Lange, a historian. Technology is a useful servant, but a dangerous master as well. So just for those, for that in mind, so today we're going to talk about our business technology survey that we ran from late May to early July. And Jonathan and I will run through some of the results. Then following that will be a discussion involving Brian Chung, who is on our digital committee in Malaysia. So Jonathan, I don't know if you can move it forward. Yes. So today we're going to talk about some of the results of our survey. So the purpose of our survey was to find what sort of general technologies businesses are using across the Asia Pacific and what influence those technologies are having on business performance. And when Jonathan presents, you'll see that some of the results show that if you're using certain technologies, you're more likely to be growing and growing quickly than others. Now there's a correlation between the two. We also look at some of the technology projects that businesses have been doing in this COVID environment. And we also will discuss the key drivers and challenges to technology adoption and some of the lessons that you could learn as a member from that. Next slide, please, Jonathan. So here's just a bit of background on the survey. I mentioned it was from May to July. We had 725 responses. So any member out there who responded to the survey, thank you for that. We surveyed Australia, mainland China, Hong Kong, Malaysia, and Singapore. We had a broad range of industries covered in the survey, and we had enough responses to be able to look at the results by business growth and by the size of business. And there are some important differences in both those factors. And most of the respondents were from that manager level and above, so people who are decision makers in business. I'll now pass over to Jonathan, who will present the results on what technology businesses use in the past 12 months and the impact that had on business. Thank you, Jonathan.
Thank you, Gavin, and welcome everyone. Yep, so as Gavin said, the first part of this presentation is on technology use in the past 12 months, and we asked respondents how frequently their business or employer used a selected list of technologies. And rather unsurprisingly, given how COVID has completely changed the way we work, where we work, and how we work, and working remotely has become a new normal, video conferencing and group collaboration tools were the most likely technology that businesses had used in the past 12 months. And given the uncertainty of the COVID situation globally, I understand that Gavin, Jana, and my colleagues in Melbourne are still in lockdown. The frequent use of video conferencing and group collaboration tools will likely continue in the future. And new payment technologies were the second most frequently used technology in the past 12 months. And this is likely because there's a growing demand for mobile, digital, contactless payments and a consumer shift to online sales, which the pandemic has helped accelerate. And cloud technology was the third most used technology, as data can be sent and accessed remotely and online. The adoption of cloud technology will also likely to continue to grow. And many businesses also use software that could help in forecasting, planning, and assisting in gaining insights, such as data analytics and visualization software, business intelligence software, ERP software, and CRM software. And the technologies that were least likely to be used were robotic process automation, RPA, which helps to identify and automate repetitive tasks, and AI, artificial intelligence, which possesses a host of different functions, including identifying patterns in data and making predictions. But when we analyze technology usage by business performance, we found a correlational connection between technology use and stronger business performance. So high growth businesses, which is the yellow bar, are more likely to report that they had used the listed technologies than businesses that remained largely the same or shrank. And while the difference in usage of the top 3 technologies is about the same, we can see that there's a significant difference for the other types of listed technologies. So, for example, around 62% of high growth businesses used RPA, which is 18 percentage points higher than businesses that did not grow in 2020. And there's also an obvious difference in usage for ERP software, CRM software, business intelligence software, data analytics and visualization software, as well as AI. And this result actually aligns with another survey we conducted earlier, the Asia Pacific Small Business Survey. And in that survey, the results show that high growth small businesses were also more likely to have invested in technologies such as CRM software and business intelligence software compared to small businesses that did not grow. But while we cannot determine causation, that is, we cannot say that technology directly leads to stronger business growth, we can see in this survey that there's a positive link or association between the use of technology and stronger business performance. So based on these results, it would be a good idea for businesses and organizations to at least be aware of these technologies associated with high growth and build their knowledge around them. And when we look at technology used by business size, we can also see some differences in the level of usage. So large businesses with 1,000 or more employees were more likely to have used technologies than smaller ones with fewer than 50 employees. And the difference is most apparent in data analytics and visualization, business intelligence, CRM, RPA, and AI. And a possible explanation is that larger businesses have more resources and especially more data to be able to use these data-reliant technologies. Whereas smaller businesses appear to put more focus on productivity tools such as video conferencing and group collaboration tools and cloud technology. And they may also not have the same amount of resources, knowledge, and data to be using these data-reliant technologies as frequently as large businesses. But for smaller businesses, you don't have to be a technology expert. You don't have to know about all of these types of technologies. You can reach out for advisors or consultants for help. Gavin, do you have anything to add here?
Yeah, so we also looked at the data by market, and some of the key observations. I'll just quickly go through them. Artificial intelligence. So when you look at that, mainland Chinese businesses are the most likely to be have used artificial intelligence in the past 12 months, and Australian businesses are the least likely to use artificial intelligence. Now, when we spoke to some of the big software vendors, many of them will argue they already have artificial intelligence built into their software, and that's true. But a lot of businesses are either don't know they're using some of that functionality, or they actually haven't turned it on. Other things are business intelligence software. You can see that it's pretty, the usage of it is pretty much the same across markets, with mainland China and Singapore and Australia the most likely to use business intelligence software frequently last year. CRM, again, both mainland China and Singapore are the most likely to have used CRM software the past year. Data analytics, again, mainland China is a strong leader in the use of data analytics, followed by Singapore and then Australia. And ERP, if you look at ERP again, mainland China is a very strong user of ERP, again, followed by Singapore. And it probably doesn't surprise you that even though it was a very bad year for COVID, China did record economic growth in the last year of about 2%. So this could be part of the reason. This could have, as you said, as Jonathan said, there could be some correlation between that technology usage and broader economic growth. And the last one I just mentioned is robotic process automation. This is something that Singapore is the most likely to have used in the past 12 months, and Australia is the least likely to use robotic process automation. And robotic process automation allows for efficiencies, greater efficiencies, and it's something that we should all, as accountants, be looking at in looking at our work. What bots can we put in place in our work to reduce some of our more mundane, regular tasks? And Jonathan, we'll pass back to you to talk about the next one, projects, I think it is.
Thank you, Gavin. So the next section, we asked respondents what the types of tech-related projects their business undertook in the past 12 months. And respondents were most likely to report that their business upskilled the technology capabilities of staff. So that's 43%. And this is positive because this shows that as companies adopt technology and continue to digitalize, they are aware that it is essential to develop the tech skills, the digital skills of their staff to effectively work with technology. And this will be beneficial in both the short and the long term. So review the business's technology for improvement was the second most popular project businesses undertook in the past 12 months. And this is a more short-term action, possibly a response to the technology challenges brought at the onset of the pandemic last year. So it's about deploying technology tools to maintain business continuity, work productivity, and supporting staff working from home. And in contrast to this more short-term response, the third most popular action is developed a long-term technology or digital strategy. And this is also positive because having a technology plan in place could help companies keep abreast of the latest technology trends and identify the type of technology tools that best fits the organization. And companies with these strategies should be well prepared to respond to future challenges and disruptions. And again, when we analyze the sort of tech projects companies undertook by business performance, we see that high growth businesses were more likely to have undertaken tech projects compared to businesses that remained largely the same or shrank in 2020. So as the graph shows here, they were significantly more likely to have focused on developing a long-term technology or digital strategy. So that's 46%, worked with technology companies, 34%, and increased recruitment of staff with technology skills, that's 25%. And if you look at the bottom of the graph, we can see that businesses that remained unchanged or shrank in 2020 were much more likely to have undertaken no major technology projects in the past 12 months compared to high growth businesses. But again, as I said earlier, we cannot determine causation, but what we can see here is that there's a correlation or link between higher growth businesses and the likelihood of undertaking technology projects in the past 12 months. So based on this result, it may be worthwhile to have a look at what some of the projects stronger performing businesses undertook. And when we analyze technology projects by company size, we can see that larger businesses with 1,000 or more employees were generally more likely to have undertaken technology projects compared to smaller businesses. And if you look at the bottom of the graph, smaller businesses were 10 times more likely to have not undertaken any major tech projects in the past 12 months compared to larger businesses. And this may be due to resourcing issues. But again, as I said earlier, companies can consider seeking help from external advisors or consultants. And when we look at the technology projects by market, we can see some differences between the different markets. So the most noticeable is that mainland Chinese businesses were a lot less likely than their counterparts in other markets to report that their employer reviewed the business's technology for improvement. That's the navy blue bar. And so a possible explanation is that mainland Chinese businesses already have a sufficient level of digital or technology sophistication to manage through the pandemic. And mainland Chinese businesses were also most likely to have upskilled the technology capabilities of staff, increased investment in cybersecurity, and increased recruitment of staff with technology skills. So the two previous sections were on the past 12 months. So we then asked respondents what technologies they expect their business or employer to increase investment in or use of in the next 12 months. And overall, the top pick was cloud technology. And as we mentioned earlier, workplaces are getting more remote, which means that there will be a stronger reliance on cloud technology where data can be sent and accessed completely remotely. And shifting from service to cloud-based solutions could also help businesses reduce costs in the long run. So 43% of respondents said they expect their employer to increase investment in or use of data analytics and visualization software. So this is good because it can help companies gain insights, provide more value-adding services to customers, and help uncover new growth opportunities. And the third most likely technology is video conferencing and group collaboration tools. So this goes back to flexible work arrangements, working from home being a new normal now, which increases the demand for more remote collaboration tools. And at the bottom of the graph, you can see that it's good that only a small number of respondents are absolutely certain that their company or employer will not increase investment in or use of technology in the next 12 months. All right, so this slide shows future technology investment intentions by expected business performance. So the list on the left shows the top 5 technologies that businesses expecting to grow strongly in 2021, 2022 expect to increase their use of or investment in. So they focus on data analytics and visualization software, business intelligence, cloud technology, CRM, and AI. And with the exception of cloud technology, businesses that expect to grow strongly are significantly more likely to expect to increase their use of or investment in data analytics. So there's a 9 percentage points difference. Business intelligence, a 16 percentage points difference. CRM, a 22 percentage point difference. And AI, a 14 percentage point difference compared to businesses that do not expect to grow in 2021 and 2022. And on the other hand, businesses that do not expect to grow were much more likely to choose that their business will increase investment in or use of video conferencing and group collaboration tools. So there's a 10 percentage points gap. And it's not shown on this slide here, but they were also much more likely to say that they do not expect any increase in investment or use of technologies in the next 12 months. So the results here may help companies identify the technologies that businesses expecting to perform well in the future are planning to increase their investment in or use of. And over the next 12 months, larger businesses are planning to increase their use of or investment in data analytics and visualization software, cloud technology, RPA, AI, and cybersecurity software. And possibly because they possess more data and resources compared to smaller businesses, they were significantly more likely to choose data analytics and visualization. There's a 21 percentage point gap. RPA, a huge 31 percentage point gap. AI, 28 percentage points, and cybersecurity software, a 12 percentage points difference. And whereas smaller businesses are more likely to focus on tools that can help in work productivity, such as cloud technology, and they were also more likely to focus on video conferencing and group collaboration tools. Any further comments, Kevin?
Well, I think I'm very interested in Brian's comments later on, but I think one of the key observations, if you go back to the previous slide around growth, is that if you are looking at developing a high growth business, looking at some of those technologies like data analytics and business intelligence is very important to that strategy, because it's not only about getting a better understanding of the client, but also things like robotic process automation is also about improving operational efficiency, which I think we'll get to in the next slides. Just looking about data again by market, data analytics, which is obviously a key one. You can see that, well, we found that around 45% of businesses, 40 to 45% of businesses were going to invest in that technology in the next 12 months. With the exception of Hong Kong, it's around about 33%. So Hong Kong are the least likely to invest in that technology, and mainland China are the most likely. Video conferencing, I'll just touch on this briefly, but Malaysian businesses are the most likely to be investing in video conferencing in the next 12 months. Obviously, Malaysia is, like much of Australia, still in lockdown, so I think that is helping to drive that. But also, it's about improving internal collaboration and collaboration with clients as well. Cybersecurity, Australian businesses are the most likely to be investing in cybersecurity software, or cybersecurity in the next 12 months. Business intelligence, Australian businesses are the most likely to be investing in that, followed by mainland China. Robotic process automation, Singapore by far the most likely to be expecting to invest in that technology next year. And we put those two together, Singapore businesses are quite focused in on improving productivity, and RPA is obviously a big part of that. And artificial intelligence, mainland China is definitely the lead in that space, and using AI to help their business. So just over around 40% expect to invest in artificial intelligence. I'll pass back to Jonathan to go through the barriers and the drivers of investing in technology.
Thank you, Gavin. So in this section, we asked respondents what they believe are the drivers of technology adoption. And respondents overwhelmingly chose improved operational efficiency. So 81% picked this as a driver, followed by cost savings and improve the customer experience, which are tied second with about 40% picking these two as drivers. And also a sizable number of respondents chose improved collaboration between employees. So improving operational efficiency, improving the customer experience, and lowering costs are important elements to businesses, especially in a very challenging environment like what we have now. So as Gavin said earlier, technology such as RPA, which can automate repetitive tasks, can help in improving efficiency, and AI can help fuel growth and add value to customers. And when we analyze drivers by business performance, there are some differences between the top 5 drivers, but the biggest difference is that high growth businesses were much more likely to have chosen an organizational culture of innovation. So there's a 13 percentage points difference compared to businesses that remained largely the same or shrank. So this could partly explain why there's a link earlier between technology used and the technology projects they undertook. and stronger business performance. So there's an impetus within the organization to look out for the latest technology trends and development and to take action. And another driver of a big difference is cost savings. So companies that remained largely the same or shrank were much more likely to have chosen cost savings. That's an 11 percentage point gap than companies that grew strongly. And by business size, there are again some differences. So large companies are more likely to choose an organizational culture of innovation. That's an 18 percentage points difference, and improve the customer experience, a 9 percentage points difference. And it's not on this slide because it's not a top driver, but 9% of small businesses chose government incentives as the key driver, compared to only 3% of respondents from large businesses. And we asked respondents what are the key challenges to technology adoption. So financial constraints is at the top of the list, 41%. Shortage of technology talent is the second most common challenge. And to potentially overcome this challenge, and I would like to hear Brian later to talk about this, companies can consider developing the tech skills within or recruit external technology talent. And complex legacy systems is also a top challenge. And companies could consider modernizing legacy systems and to avoid potential security breaches, which leads us to the other top challenges, cybersecurity and data privacy concerns. And again, I would like to hear Brian's opinion on this, but things like committing an appropriate level of expenditure to maintain and protect the systems from a cyber attack could be one way to address these issues or challenges. And when we cut this data by business performance, unsurprisingly, financial constraints is a top challenge for businesses that did not grow. So 51% chose this option compared to only 35% from high growth businesses. And companies that did not grow were also more likely to pick a lack of understanding within the board or senior management. And that's an 8 percentage point difference compared to high growth businesses. And again, this goes back to the narrative that an organization should at least be aware or keep abreast of the latest technology trends and development. 36% of high growth businesses chose cybersecurity concerns, which is their top challenge. And this is a little higher than the 30% of businesses that remained largely the same or shrank. By business size, so 45% of large companies chose complex legacy systems as their top challenge, and this is 33 percentage points higher than small businesses. And this is because it is likely that large businesses may have legacy systems that could be 20, 30 years old, and this could be a challenge to technology adoption for large companies. And for smaller businesses, they may probably have less resources, so financial constraints are their top challenge. So 52% chose this option, which is 23 percentage points higher than large companies. And I think I'll hand it over to Gavin to comment on the market-based differences for this slide. Gavin?
Thanks, Jonathan. So maybe before we get to that, I'll just quickly, I know this is not a cybersecurity presentation, but I'll just mention the Office of the Australian Information Commissioner produced some information earlier this week around data breaches. So we have spoken about data security and cybersecurity. The top in Australia in the last 6 months, the top 5 industries to report data breaches. Number 1 was health services. Number 2 was finance. Number 3 was legal, accounting, and management services. So the third most vulnerable industry in Australia at the moment is legal, management, accounting services. In fact, more accounting businesses reported a data breach than the Australian government. So it just shows why it is a barrier to adoption. The businesses are worried about their data security. But it's not necessarily all through data hacks, criminal offences. A lot of the areas around data breaches are human errors. So around about a third of the breaches were human. And the top causes for human errors were personal information emailed to the wrong person, unintended release of a publication, failure to use BCC when sending an email. I think we all may have done that occasionally. And the last top cause of human error was personal information sent to the wrong person again. And that could be not necessarily by email, but maybe by mail. I just thought when there's been a breach through a cyber attack, the main causes of those cyber security incidents were a phishing exercise, compromised or stolen credentials, and ransomware. So they're the top three in terms of cybersecurity challenge. So just in terms of key challenges across the markets, you can see there financial constraints are largest in Malaysia, but also Malaysia, a shortage of talent is a key issue there, like it is in the other markets. And we do know that a shortage of tech talent is a global issue. And I would say it's a bit, for markets like with lower salaries, it's harder to compete with markets like Australia and Singapore, which can offer much higher salaries. So one issue is how do businesses ensure they have the right tech talent? Part of that is looking at not just recruiting that talent, but maybe developing from within as well. Jonathan, just move on to the next slide, please. So some of the key lessons, Jonathan spoke about this as well, but from a business point of view, the key lessons are, there is a correlation between the technology you invest in and growth. So have a look at that. As an accountant who might be considering a technology investment or pitching something to the board or senior management, think about those technologies which lead to growth. Think about how those technologies can meet the needs of the business, predominantly improving operational efficiency, and how they can improve the experience for your customers and for your staff as well. On the other hand, some of the key challenges to also think about when talking to boards and management include how will that technology interact or sync with the existing systems, or maybe even replace. The cybersecurity features are very important, as is the data features. And while it's not on that slide, but also about the tech talent and how can you actually service this technology to get the best out of it. Now, this slide here is actually about the tech talent, the key lessons for your tech vendors. So the people that are coming to you to try and pitch their technology. So they need to think about how the technology improves your efficiency and can over time lead to cost savings. And that also is a consideration, how they bundle up the cost of their package. Do they do it as a software as a service or something different? And they need to look at how it interacts with legacy systems, cybersecurity, and they need to really focus on cyber and data. But also, as your technology vendor, they need to show to you how they can support that technology so that you feel confident that you'll get the best out of the technology and that you'll get achieve those objectives you set out to achieve. So I think now we pass back to Jana for our Q&A session. Thank you for listening to this part of the presentation. Now we go on to the really interesting part of the presentation, which is where Brian will provide some responses.
Yeah, thank you so much, Gavin and Jonathan. That was a fantastic presentation, and I do have quite a few questions, and so does the audience. We are now moving to the Q&A session, and I just realized that we have already received quite a few questions. So I'm going to start with Mohammed's question. How accountants can play their role in RPA and AI? Who would like to take this question?
I'll start it off, and maybe Brian can come in. So we have a few examples of members who themselves have programmed their own bots. They've looked at their work functions and what they do, and they looked at, I don't want to keep doing that. I do that all the time. So they've actually programmed their own bots themselves and integrated it into the company itself. The other thing you can do as an accountant is to actually start to document your processes and then speak to the technology unit to help develop a bot for that. But I think it's important, and Yana and I have spoken about this, it's important that you as the accountant drive this, not the technology, the IT section. You are the one that understands your processes, and you are the ones which understand what is a repetitive task that can be automated.
Yeah,
Right?
and if you don't mind me jumping in here, that brings us to the question that was asked by Kenneth, which is, will the introduction of AI cause people to lose their jobs? And you have partly responded to that question already. Brian and Jonathan, would you like to add anything?
Yeah, okay. Before I answer the question about how accountants can play their role, I'd like to add on to it. I think it's important that as accountants, we don't jump onto the bandwagon, without having a proper digital strategy. And as an accountant in a company, it's important that we have a business case around the digital strategy. So it's not just about looking at tools and looking at my competitor is using this particular AI or RPA. I think we should use it as well. That's a fallacy, in terms of application of the tool. Instead, we should be thinking of formulation of the digital strategy and how the tools could be used to execute that strategy. So that's the big picture that we should have, and that should be the overarching theme for any companies that want to go digital, right? So the question about RPA and AI, as an accountant, you have plenty of processes, right? Particularly in the back end, in terms of invoice processing, in terms of keeping records, document management, those kind of processes, you probably go through it every day. If there's a business case around it, for example, if you use an RPA or AI to help you do that work, which will free you up to do some other higher value kind of task, then there's a business case, and you'll be able to come up with a report and make a recommendation, to the management. So it's not just about, everyone's using AI, so let's jump onto the bandwagon. Yeah, so it's important as accountants, because we are trained, right, to look at numbers. It's important to build a business case first, on the application of the tools, which brings me back to my earlier point. Formulation of strategy, is first and foremost. Okay. Will the introduction of AI cause people to lose their jobs? Yes, absolutely. Of course, there are certain tasks, which still need the human's intervention. But I'm sure you have read reports, where repetitive processes or repetitive tasks that can be easily taken over by machines. And if you find yourself doing that, then yes, there is that possibility in the future, right? Which brings us to the point, of reskilling and upskilling. And I know one of the survey findings showed, the last 12 months, that there was activities of upskilling of staff. So my question actually is, the staff that's being reskilled, are they accountants, or are they technology or tech staff? Because if they're accountants, then that's good. because then therefore, you are progressing. You know that there are certain processes, that could be taken over by machines eventually. We do not know what's the time frame because it depends on your industry, it depends on your company. But as an accountant, we need to be aware. If we continue doing processes that are repetitive, then there is always that threat. And therefore, we need to take the step of upskilling and reskilling ourselves.
Thank you so much, Brian. Brian, you just mentioned upskilling, and I'm wondering, in the context of the skill shortage, so the technology skill shortage that we are facing all over the world, I'm wondering what you would recommend to businesses, what they can do to upskill their staff or to cover that gap, that technology skill gap, and what policymakers can do as well.
Okay, so technology skills encompasses a very broad area, right? So if I were to start from, especially we notice here, right, in this part of the world where small businesses were hit, and a lot of small businesses were very traditional, in terms of doing their business. So when they were hit by the lockdowns and the pandemic, a lot of businesses went to digital marketing, and some of these traditional businesses have zero idea, right? They have no idea on how to do digital marketing. But they still manage, to scramble. They still manage to learn over a short period of time, 3 months, 6 months. And a lot of businesses now are doing really well on a digital platform, right? So that's on the digital marketing. Now, if you were to ask accountants, can they learn digital marketing skills? Of course they can, because we have non-accountants, or we have traditional entrepreneurs who do not know digital marketing, and they have picked up the skills. So as accountants, we should not limit ourselves, right? We should not just limit ourselves to just looking at numbers. We can pick up digital marketing skills, right? Second, data analytics. And I know, the survey findings, pointed to, a lot of activities are being undertaken on data analytics, particularly in countries like Singapore and China, if I'm not mistaken, and Australia. That's also one aspect, that we could do. Now, before you can go into data analytics, the company needs to realize, how do I pull the data together? Because traditional businesses, they interface with a lot of customers, whether it's the offline method or the online method, they interface with many customers over a period of 10, 15 years. But a lot of data are not being captured. Okay, but now with technology, you can actually capture the data. Okay, because it's important that you capture the data, because before you can do data analytics, you need the data. So therefore, you need to build an infrastructure, IT infrastructure in your company to capture that data and use that data to give you insights, on how you could profile the customer, on how you could target a particular customer segment, on knowing the preferences of your customers. So all this, it relates to understanding the numbers that the company have, the information that the company have. So as an accountant, do we have the ability? Are we in a position to do it? Of course we are in a position to do it, because we control the numbers, right? The transactions, the purchases, we control these numbers. So we have the data in our hands. But the problem is, we are not capturing and we are not making sense of this data enough in order to help businesses grow.
Thank you, Brian.
Yeah.
You just mentioned,
yeah.
Oh, sorry. You just mentioned data multiple times. And whenever I hear data, especially in the accounting and in the audit context, I instantly think of data privacy and cybersecurity, especially in this current environment. Now, Jonathan has outlined earlier that cybersecurity and data privacy are some of the key concerns. In your opinion, what are some measures that businesses could consider implementing to mitigate risks of cyber attacks?
Right. When it comes to cybersecurity and privacy of data, unfortunately, that's not really top in a priority list, of companies, particularly during these trying times, because let's put let's put into two buckets, right? So there's one bucket where you have companies, just looking for survival. Yeah, they need the cash flow, and therefore, they will embark on various digital marketing activities, right? In order to survive this trying times. Then you have bucket 2, where the company may not be struggling, but they are maintaining. And therefore they'll probably be thinking, all right, I can't maintain. I need to grow, and therefore they will invest, in the tools or applications where it will help them grow. Cybersecurity, unfortunately, will not be top of their list. Then of course you have, bucket number 3, you have companies that are doing well, and therefore they have the resources, and therefore they could actually focus, or they could actually put a bit more resources, on cybersecurity and like data privacy. So for those companies who may have a different emphasis during this period of time, during this season, it doesn't mean that they should sacrifice cybersecurity, but it depends on the reliance of their business on the digital platform. So the more the reliance on digital platform means the more revenue that they get, and then the more data that they extract from the consumers, they will need to they will need to allocate more resources for cybersecurity purposes. So it depends, right? Because you can't expect a small and medium enterprise company, right, to invest $1 million or so, into cybersecurity, when we know that it's important, but realistically, it depends, on how reliant the business is, on a digital platform. So the heavier your reliance is, then the more resources that you should allocate for cybersecurity and data privacy. Yeah. So my call to the companies, especially SMEs, who have gone digital, it is an aspect of the business that you should consider, because it's something like insurance, right? Cybersecurity is something like insurance. You buy insurance, you hope you don't use it, right? But you still buy. But when you need to use it, it's there. So it's the same thing with cybersecurity, because you have extracted a lot of data, you have pulled it together in a particular place. You wouldn't want to lose your data, or you wouldn't want, right, to be in a position, where you're prone, to being hacked, by hackers, right? So it's something that is needed, and therefore some resources need to be allocated.
Thank you, Brian. I picked up one more question from the Q&A box that came in from Rosemary. How do we get boards engaged in technology issues given the importance to growth?
Okay, do I answer it, or?
If you would like to, that would be great. Yes.
Please do.
Okay. ROI. It's very simple. We need to calculate the return of investment, and present it to the board. So it goes back to my point earlier, about having a business case for the digital strategy, right? That you're going to implement for that particular business, and therefore you need to work out the ROI. So I mentioned just now about digital marketing. You need to work out what's the ROI for digital marketing. And again, when you implement these different tools, the survey findings we saw just now, it depicts, it gives a very good picture, right, of the digital tools, right, that the members are using or the companies are using. But we need to have a roadmap, right, a technology roadmap for each company, because there's no way a company could adopt all the digital tools at one go. There's no way, right? Because resources are limited, right? And then when I talk about resources, it's not just about monetary resources, but it's also about talent, about the people executing it, right? So it's limited. So therefore, you need a roadmap, and therefore you need to plan how you're going to introduce the tools, and all these tools should lead towards the top line and the bottom line. It has to, right? You don't implement a digital strategy, or you don't apply a certain digital tool just because you want, you just want to be part of the trend, right? I do not want to miss out, on the trend. We don't do that, right? We should look at how it will impact on the top line and the bottom line. Okay, whether it's implementing an RPA, which will smoothen the process. Remember the example I gave you, smoothen the process, and therefore you bring down the cost, and therefore that particular person or a few people in the department could actually focus on some other revenue generating task of activity. So whatever digital strategy or digital tools that you're going to propose to the board, you need to quantify it, right? It's not just about, oh, you know, it's nice to have, but you need to quantify it, which will lead to the impact on the top line, the revenue, and the bottom line. And I think that's the most effective way, because as a board or as a senior management, I want to be able to look at digital tools as an investment. So if I look at it as an investment as opposed to an expense, then I want to know what are the returns.
And could I just ask to that is, from your experience with boards and senior management, does it make a difference when you're talking to a board which has technology skills on the board compared to a board without their technology skills? Do you approach those different boards in different ways?
Yes, of course. You know, board with technology skills, obviously, you know, it's going to be easier, right, for us to explain. Those without technology skills, it doesn't mean that you know, they will find it, or rather, it will be slightly challenging. But that's the role of an accountant, I suppose. You know, whoever that's going to present to the board, to make it to make a business case. It goes back to my point, a business case, right? So the digital technology, the tools, is just a tool. It is just a tool. It's not a business model. Okay. Now, businessmen, board members, they are successful entrepreneurs. They are successful businessmen and women. If you present a business model, I'm very sure 100% they will be able to understand it. So those tools are just there to facilitate a business, a new business, or a new way of doing the traditional business. You know, but it's just a tool. So it's just an enabler, you know, if I can put it that way. It's just an enabler of traditional business going to a new way, or an enabler of a new business.
Thank you, Brian. We still have time for a few more questions. Jonathan, this might be one for you. Are the respondents who picked complex legacy systems concentrated in specific industries? Do we have any survey findings on that?
Thank you, Jana. We have not analyzed challenges by specific industries, but we did find that, as the presentation showed, that larger businesses were much more likely to consider complex legacy systems as a challenge. So it's likely that large businesses in multiple industries will consider this as a challenge to technology adoption.
Great, thank you, Jonathan. We spoke about small businesses earlier, and they may face different challenges compared to their larger components, I would argue. Now, Brian, what should policymakers do to help small businesses in particular to keep up with the technological advancement and to pick up more technological solutions?
Yeah, we can see for the past 18 months, you know, governments in Malaysia, Singapore, and I believe Hong Kong as well, I believe Australia as well, that certain rebates or certain subsidies have been offered to small businesses to adopt, you know, digital technology in their business. So that's a good way, you know, to kind of kickstart. So the pandemic, as you know, as some put it, right, it was a catalyst, you know, or it created an acceleration of digital adoption by companies. So I remember 2 years ago, you know, we were thinking over here, how do we get companies, small businesses, right, to go digital? It was very difficult because, you know, they were doing well, and they didn't see the need of going digital. But of course, the pandemic changed their whole mindset. And, you know, with the help of the government, in terms of giving subsidies, that will help. Second is tax. Probably, you know, giving some more tax-friendly regimes for companies that use digital applications. Not all digital applications are expensive, particularly the small businesses. They don't need to invest a lot of money at the start. But for the medium and the bigger businesses, as the businesses grow, and as I give an example of cybersecurity, for example. If a business were to use a cybersecurity software, were to subscribe for it, then perhaps some tax exemptions or benefits could be given, and that would encourage companies to use tools which seemingly do not generate the ROI, but it's very important in relation to the preservation of data and the sustaining of the business over the long term.
And I'll just add to that very quickly. I'm conscious of time that CPA Australia thinks government should be doing more. We look to Singapore, who's doing quite a lot in this space to provide not just the financial incentives, but also the access to the skills. So in what we find in the small business space is not just the capacity issues about access to finance, but also the capability. So they also need that access to some of that capability as well. So there's a two-pronged challenge around the financial constraints, as we discussed before, but also the skills as well. And if governments can look to help to build that particular expertise, I think that would really help.
Yeah, very good point, Gavin. And now, before we finish up for today, I'll slip one more cybersecurity question in, which came through from Rosemary. Thank you very much. Now, I believe one way to address the cyber issue is to purchase cyber insurance. Brian, what do you think? How can accountants send out the message to their clients that having cyber insurance in place is probably one of the top priorities these days?
I think real life case studies would be helpful. When we organized an event last year before the lockdown, and that speaker spoke about cybersecurity, and he shared some real life case studies, and it kind of shocked me, because I didn't realize the impact of a inadequate cybersecurity could have such an impact on the company's performance, right? I think in the worst case scenario is the company could even be sued by customers or consumers or clients if the data is not being protected adequately. So some real life case studies would be very helpful, because I think we don't realize the severity of it. If we don't put enough resources, we will not realize the severity of it until it happens to us. And of course, it's something that we want to avoid, that we do not want it to happen in a company, and then trying to unravel it or trying to scramble, right, to find solutions. So it's better to get protected now, than having to find a solution later on. So as an accountant, I guess what we could do is have some meetings and just advocate, right, the use of cybersecurity, the importance of cybersecurity to our clients.
Great, thank you so much, Brian. That was a very important message for the end of our webinar. We are running out of time. It's exactly 5 p.m. Thank you so much, everyone. I hope you all learned a lot about technology and cybersecurity today. Thanks, Gavin, Jonathan, and Brian. And I will now hand back to Helen. Thanks.
Thank you, Jana, and thank you very much to Brian, Gavin, and Jonathan for today's session. Also, thank you to everyone for your participation today. In the next 3 working days, you will receive an evaluation survey accompanied by the recording of this webinar. We really appreciate your feedback, as it is extremely valuable to CPA Australia to help us to deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia event soon. Bye, everyone.